Hi, this is Vijay Bambani. I'm back again in another video, and in this video I want to talk to you about a subject which I'm sure you all love to know about. I'm talking about gold, God's own currency. And after I complete this video, I'm sure you'll agree with me that there is justification in the reason why gold is called God's own currency. So in my earlier video on 11th of June 2020, I advocated that it was the institutions and the larger investors who would actually drive gold price higher. Because of social distancing and the coronavirus, it was unlikely that a huge amount of buying comes in from individual retail or jewelry buying. And data that is released for the end of June period has justified my hypothesis. I'm going to share with you these numbers in a few seconds from now, and I'll make my case for why gold is likely to go higher. Now, in my video about the US presidential election cycle, I've advocated as to why this time it's going to be different in the US presidential election, which is likely to be held on 3rd of November 2020. Unlike the standard operating procedure and the step-by-step checklist that the US administration follows in the economy, financial markets, interest rates, etc., things are not really going as per their plan or as per what they would want them to go. So, gold is rallying even before the US presidential election, which is against the grain. Typically, gold and silver are kept subdued before the elections, and equity and real estate market are pushed higher. The US dollar is buoyed up so that the US can manage its humongous debt and curb inflation. So this time around, gold is rallying. The US dollar, as can be benchmarked by the US dollar index, which is against the global basket of currencies. The US dollar index, also known popularly as the Dixie, is not really showing any great signs of strength. Now, do remember that commodity prices are bought and paid for in the US dollar, which makes the US dollar an invoicing currency, or the currency in which the give and take is settled. If the dollar weakens, commodities become stronger. So a weak dollar is actually pushing gold prices higher. Other reasons for the US dollar to be weak and therefore gold to be strong are not really far to seek. The economy is fairly weak, employment data is pretty poor. You also have the corona pandemic, and most importantly, from the financial markets point of view, yields on fixed income investments are actually plummeting, to the extent that there are many countries where bond yields, the sovereign benchmark bond yields, bonds that are issued and guaranteed by the central governments of those countries, are actually trading in the negative. So you actually have to pay the bondholder, the bond issuer, money to keep your money safe. Now, this is driving people crazy, and they are seeking safe havens or alternate avenues to park their funds. Gold, naturally, which has been providing safety for more than 3,000 years to savers, is now the de facto choice. My weekly cash alert subscribers would remember that I advocated buying physical bullion, both gold and silver, in the month of June 2019 at the rate of 34,500 for gold and 38,500 for silver. And these investments are deeply in the money. The Fast Profits report subscribers, now remember, this scheme was launched far later, and I advocated buying gold and silver at 48,800 and 50,200 respectively in January of 2020. They are also in the money, and of course the weekly cash alert subscribers are deeply in the money and enjoying supernormal returns. Now, what does gold actually need before it can rally. It needs falling interest rates, which are prevalent all around the world. Look at the world around you. And besides, the US has made no issued no uncertain guidance that they would like to keep interest rates lower so as to provide stimulus, in the words of the Fed, to the extent of doing what it takes, doing all it can to stimulate the economy, which means that interest rates are headed lower. Positive news for gold. You also need a falling dollar, a weak dollar, which we have seen over the last couple of weeks. The Dixie has been falling thanks to the coronavirus and the angry war of words with China, Iran, North Korea, etc. So typically this is a very conducive ground for gold bulls to actually see a lot of positive action and things going their way. Now, just like silver, in another video which I've recorded for this week, just like silver, gold is also witnessing an all-time high inflows in ETFs, physical buying, and all kinds of electronic modes of buying. As far as the ETFs are concerned, they have seen total investments in gold of 3,621 tons, of which 104 tons were added in the month of June 2020 itself. Now that is significantly higher than the previous peaks when gold was purchased in very large sums by the ETF industry in 2009 and 2016. The fact that the US Federal Reserve is printing unbacked currency. By unbacked currency means currency which is not backed by any natural or physical resource and or backed by earnings. And therefore, this currency is merely an IOU or a promissory note issued by the government. The fact that the US Federal Reserve is printing unbacked currency in record levels means that the value of the US dollar is likely to remain under pressure. The buying power of the dollar is likely to erode, which means this is again another tick mark or a bullish sign for gold. Historically, we've seen whenever gold bottoms out, it is typically when the Dixie peaks out. When the Dixie hits a high and then starts to fall, gold makes a bottom and starts to rise. The last time Dixie peaked out was in December 2016, just after the US presidential election ended and Donald Trump assumed office. That time around, the Dixie was 103.62 levels and gold bottomed out at $1,187 in the overseas markets. Now, the Dixie is clearly showing all signs of not being able to test or even surpass, forget about surpass, the December 2016 levels, which is what Donald Trump needs. He needs a very strong US dollar before he can even hope to win a second term in office. But the Dixie is finding it a challenge to rise even above the 97 level. So 103.62 is a far cry, which is why gold, contrary to the US presidential election cycle, is rising even before the US presidential election. The fact that the Dixie is falling, and should it fall below the 95 levels and stay there below 95 levels, remember, I do not rule out the possibility of a new all-time high in gold in dollar-denominated terms even before the US goes to poll in November, on 3rd November rather, 2020. The fact that the Chinese and the Iranians are now getting to be best buddies and broadening their trade ties. Obviously, the Chinese want the Iranian oil and gas, and the Iranians need Chinese exports because the US has imposed crippling sanctions on Iran. So these two best buddies, newfound best buddies, are actually antagonizing the US and raising the possibility of a trade war against the US, which means more uncertainty, more nervousness in the financial markets, and hey, that's always bullish for gold. Also remember, there are two very disturbing events that have occurred in the financial markets. Although they are so far from home that people tend to discount them. But, like I said, gold prices this time around are going to be led by institutions, not by retail. And institutions are knowledgeable people. They know their onions better than you and me. They are watching how the Chinese government has clamped down on large-scale cash withdrawals from the banks, both by citizens and in businesses. The same thing is occurring in Lebanon. Whenever citizens are not allowed access to their own money from their own bank accounts, there is always bound to be nervousness, and that is actually pushing gold prices higher. So, like I said, if the Dixie falls below 95, the price of gold can actually go to an all-time high even before you and I realize it. I assure you, I'm going to keep an hawk eye on gold on your behalf, and whenever the Dixie was to go below 95 and stay there for a couple of days, you can remain assured there's another video coming from me. And like I told you, gold is therefore undeniably God's own currency. If gods trust gold, so should you. On this optimistic note, I say goodbye to you in this video till I come back to you with another video. If you're watching this video on YouTube, don't forget to click like on this video and subscribe to my YouTube channel. In the comment section, do let me know what you think about this video and what else you would want me to record next for you. And help me spread the cult of knowledge-based investments and trading by recommending my videos to your family and friends. Please do take very good care of yourself, your health, your investments, your trades, and your family. Vijay Bambani signing off for now. Thank you for watching my video. Bye-bye. Also, do not forget to subscribe to my free email newsletter, Fast Profits Daily, and get my free guide, How to Trade Markets Like a Pro.